What's up, everyone? In today's episode, I want to have a little fun and talk about Wall Street Bets. Now, for those of you who don't know, Wall Street Bets is an online community on Reddit where they talk about betting on different stocks. Now, I use the term betting instead of investing because some of the different trades are pretty speculative and they either pay off really well or they don't. Now, I'm personally a big fan of Wall Street Bets. I like going on there for the memes as well as for a couple different stock picks, and it's honestly just a good time to kind of scroll through and see everything. Now, Wall Street Bets has been getting a lot more public PR on these different news sites as Gamestop has been taking off in the past couple weeks. Now, Gamestop was trading around the $4 to $5 mark just a couple months ago. However, it's all a really nice run up as they've been making a lot of different strategic investments and partnerships. So as of last week, GameStop was trading up over $40, to which Andrew Left of Citron Research came out with a short position and a short call saying that GameStop was going to crash all the way down to $20. Now, as you all seen with the meme power of Wall Street Bets, GameStop has been taking off on a rocket ship to Mars, to which the stock shot up to almost $160 to where it came back and is now trading around $100 at the time of this recording. Now, I'm really happy for all the investors who got into GameStop as it gives a lot more power to the smaller individual investor. Now, after seeing this amazing run in GameStop, I still think it has a little bit more room to run as there's still a lot of hype behind this stock. However, based on fundamentals alone, I'm not too sure if it's a good investment right now. So what I want to do in this video is break down the trending stocks on Wall Street Bets as of today. So before we get started, don't forget to smash that like button for the YouTube algorithm and consider subscribing if you like this content. If you guys want some free stocks or free money, the links are going to be down below in the description for you guys to go ahead and do that. And without further ado, let's have some fun and dive into Wall Street Bets. So what's happening with these stocks? Well, many of the trending stocks on Wall Street Bets are the most shorted names in the stock market. GameStop has a short float over 100% with Bed Bath & Beyond and AMC rounding at the top 5 in the stock market. Now, GameStop, Bed Bath & Beyond, Blackberry, and many of these other stocks have been getting a lot of positive news in regards to their business and business strategy. As more retail investors are getting into the stock, a lot of shorts are starting to have to cover their position. This is called a short squeeze. Now, a short squeeze occurs when a stock or other asset jumps sharply higher, forcing the traders who have a bet that the price will fall, aka a short, to buy it in order to forestall even greater losses. This scramble to buy only adds to the upward pressure on the stock price. So short sellers borrow shares of an asset that they believe will drop in price in order to buy them after they fall. Short sales also have an expiration date, so when a stock unexpectedly rises in price, the short sellers may have to act fast to limit their losses. And this is really what's causing the squeeze to push up the price at a drastic pace. So now let's talk about what's happening with GameStop. So in April, GameStop was a struggling video game and electronics retailer trying to sort out its future as the pandemic worsened consumer trends that were already working against it. The chain was losing money and staring down a long underway shift in the gaming industry that pushed its business away from GameStop's brick and mortar model. It turned out people don't like walking into stores during a pandemic to buy games when they can just download it online. Big shock, right? Now, the company has posted $470 million in losses in 2019, 8 years after reporting a $340 million profit. Right after the pandemic hit, it announced that it would close 300 locations permanently. GameStop's stock price in April 1st was $3.25. Now, GameStop has not just completely changed its whole entire business model, but this has become one of the most memorable runs in the stock market ever. It's a story that encapsulates quite a lot in life about 2021. 1, the democratization of the financial markets. 2, the mobilization of a giant online community. And 3, the ability of obsessed amateurs to alter reality when they put their minds to it, especially when there's not much else to do. So GameStop, founded in 1984, has a very simple business model, selling video games and equipment out of its physical locations. That obviously became less lucrative as it became more common for gamers to buy games online, and the pandemic crash in March really brought the stock to an all-time low, and it looked like GameStop was out for the count. Now in August, well-known investor Ryan Cohen, founder of online pet food Chewy, took a 13% stake in GameStop. In November, he wrote a harshly worded letter to the company board, lambasting it for not keeping up with the transition from physical hardware to digital streaming, among other errors. He took specific aim at the GameStop CEO and blamed the company for squandering billions of dollars and a massive amount of market share. Now, this letter gained a lot of press, and by January, GameStop appointed Cohen and 2 other associates from an investment company to serve on the newly expanded board. Cohen's arrival turned GameStop into a cult stock, where retail investors believe he would be the corporate savior. Now, shortly after the announcement, GameStop stock surged, going from $20 to about $40. So this is where institutional investors decided to take massive short positions against the stock. Now, hype around GameStop continued bubbling around Wall Street bets, and the stock boom has made some of them really big money. Now, the most famous Redditor calls himself Deep Value, who had turned a six-figure investment to nearly $14 million by this Monday. Others may have wanted just to screw short sellers, who are by definition rooting for shareholders and companies to suffer. Now, the community has rallied together with a fury against the short sellers. One poster wrote, "When these boomers made their bet, GameStop wasn't a big thing on Wall Street bets yet. I don't feel bad at all taking money from these rich, greedy hedge fund managers." Now, whether for profit or ideological reasons, Redditors are winning. They're buying the hell out of GameStop, and the short sellers are beginning to abandon their positions, leading the stock to go up more, even more as they buy it back. Melvin Capital, one of the leading shorts for GameStop, was down 15% for the year on January 22nd, according to the Wall Street Journal, leading the fund to take a $2.75 billion rescue package from other investors. So with all this, where does GameStop's future lie? Well, gaming companies now offer subscription plans like Xbox's Game Pass that have made individual game purchases obsolete for some players. Future consoles may not even have a slot for a disc, such as the PS5 discless version, further pushing the industry into downloaded games. Now, GameStop does have a loyal fan base that enjoys the experience of walking into a store and buying a title, and it also has a large trading business, though it's not clear how the post-pandemic world will affect that. With new management coming in trying to shift this toward an e-commerce play, it could have a lot of potential. Now, this is all to say, GameStop's future could go any number of ways, but the reason its stock price quadrupled in 3.5 weeks isn't that its business fundamentals are that great. It's that under a strange set of colliding circumstances, one group of stock traders see GameStop as a perfect weapon against the other. So after GameStop's amazing run, Wall Street Bets has turned its eyes on Blackberry, attempting to pull the same trick with the once popular smartphone maker. So far, they pushed shares up more than triple from $6.50, where they started trading at the beginning of the year. Now, in BlackBerry's case, there have been a lot of genuinely good news to fuel the rally. In the last 2 months, we've seen BlackBerry settle a lawsuit with Facebook that would provide recurring revenue, ink a deal with Amazon that could also power sales growth, and post positive adjusted earnings in its most recent quarter. These are all very positive developments. Now, whether it's positive enough to drive a 200% rally is kind of beyond me, but you would definitely expect a company's stock to rise after releasing these good news. Now, BlackBerry has emerged over the past year or so as a major player in secure autonomous driving software systems. It's not the same BlackBerry that we know from 10 years ago where they're making just cell phone devices. Partnerships are stacking up with Aptiv, Baidu, and Microsoft, and looks well poised to continue to act on these partnerships. Now, although BlackBerry is familiar to many for its cell phone line, the company switched its focus back in 2016 and sold off many of its handset assets. It now focuses on cybersecurity, artificial intelligence, and the Internet of Things solutions. Now, its end-to-end cybersecurity tools secure 175 million cars, and its operating system helps run driver assistance and infotainment for 8 top automakers. Now, with selling off most of its patents to Huawei, further distancing itself from its handset business, and also settling a lawsuit with Facebook over its messaging technology, I believe that more gains could be on its way. So of course, let's not forget about Nokia, who has also been getting a lot more attention on Wall Street Bets. Nokia is definitely another turnaround play. Now, many believe Nokia is overlooked and forgotten in the tech market. So it's true that they're no longer the company that they used to be, a dominant phone manufacturer, which is why the stock has gone on a long and extensive slide. However, that's exactly the point a lot of people are missing, that it's not the same company anymore. Although they're still making phones, their focus has changed to phones to telecommunication equipment. Many believe that they're very promising and an undervalued 5G player in the game. Now, the political landscape has turned upside down compared to last year and is now a lot more favorable to Nokia than ever before. With all the China commotion and numerous accusations, Huawei, the leading 5G player, is now growing a very bad reputation in the western part of the world. Administration has already signed an executive order to focus on 5G telecommunications development independent from China. Now, TELUS, a Canadian telecommunications company, recently announced that it's been selected Nokia and Ericsson to deploy 5G services across its network. Now, the recent falling out of Canada and China, you can see the Huawei extradition case, only added more fuel to the fire in the relationship. Nokia is also signing new contracts left and right, as well as Ericsson, and growing its presence in India. Now, a new CEO will be taking over its chair in September, who's going to focus on expanding Nokia's presence in Europe and Asia. Now, US is also going to try to stay away from Huawei, although there are many others who claim that we are too dependent on China to break ties like this. Now, some believe it's a political play than anything else. COVID-19 and the countrywide riots have basically cemented that already sure scenario of a mass-scale surveillance. Now, 5G equipment is already starting to expand, whether we like it or not. So it remains to be seen whether Nokia will be able to make up for its delayed 5G investments against competitors such as European peer Ericsson. Now, Ericsson has been ramping up its R&D efforts to increase its competitiveness in the 5G market way before Nokia, which has resulted in a gain of market share outside of China from 32% in 2017 to 36% in 2020. On its networking infrastructure side, Nokia will focus on critical networks by leveraging silicon and software technologies that offer customers extra flexibility compared to legacy monolithic offerings. Those choices will allow the company to remain competitive, but Nokia may be late again as network vendors have already been embracing those technologies for quite some time. So in any case, Nokia's transformation will span over several years. So despite risks and uncertainties related to the company's late start in the multi-year plan in improving its competitiveness, the stock is trading at 25 times trailing 12-month earnings. Now, as we all seen with these stocks on Wall Street Bets, there are many retail investors, and as the stock price starts picking up, we've seen that the hype continues to drive it further. So now let's talk a little bit about Bed Bath & Beyond. Now, not as popular as some of these other stocks on the list, but Bed Bath & Beyond has been getting a lot more popularity in the past couple months. Now, Bed Bath & Beyond is a parent company with the following subsidiaries: Bed Bath & Beyond, Harmon & Harmon Face Values, and Bye Bye Baby. Now, Bed Bath & Beyond is an American chain of domestic merchandise retail stores. They sell anything from kitchen appliances to home decor, bedding, bath, and many more. So Bed Bath & Beyond is another retail turnaround investment, as the stock has more than doubled in the second half of 2020. Bed Bath & Beyond is an intriguing idea for a retail turnaround investment, as a home goods retailer shed some of its underperforming businesses and streamlined operations. Now, Bed Bath & Beyond fits the profile of a stock that would attract Wall Street Bets' attention because it has substantial short interest. Therefore, a sudden move higher could cause a short squeeze that makes the stock surge. Now, the company has a total share repurchase plan over the next 3 years, totaling up to $825 million. The company has been massively mismanaged over the past 5 years, and they seem to finally be turning things around. Their CEO is quite solid, and he's really trying to make strategic investments back into the company. Now, in fiscal Q2, the company reported earnings of 50 cents per share. The analysts had been expecting a loss of 29 cents per share. Additionally, revenue of $2.69 billion beat expectations by more than $72 million, even though sales declined 1.16% year over year. However, this progress goes beyond top and bottom lines. Comparable store sales grew 6% versus expectations of a 2% decline. Adjusted gross margins came in at 35.6%, way ahead of estimates at 31%. Best yet, Bed Bath & Beyond generated operating cash flow of more than $750 million. Free cash flow came in at more than $500 million, which is very remarkable for a company with a market cap of $2.4 billion. The company also reduced its gross debt by $500 million and further enhanced its liquidity position by $400 million to $2.2 billion through strong cash generation and a new $850 million secured net asset-based lending facility. CEO Mark Tritton said, "Our growth strategy is unlocking improved financial performance, and the marked improvement in our second quarter financial results reflects the potential of our digital-first, omni-always transformation and our efforts to build a modern, durable platform for success." Now, digital sales grew 88% last quarter, which helped offset the decline in retail sales. Now, it looks like they're going to continue riding this e-commerce wave and going to continue to improve e-commerce experience in light of the store closings. I honestly think Bed Bath & Beyond could be a pretty good turnaround play, and I will definitely be watching it to see how it trades within the next couple weeks. So there we have, guys. That was my breakdown of the top trending companies on Wall Street Bets. Now, it's really fun to be part of this community and really see other people make a lot of money. Now, one fair warning to you guys is that these stocks are being driven on hype and pure speculation alone, and they're increasingly being detached from the financials. Now, these stocks are promising a very bright future, and it's really up to you to really decide whether you believe in the story that they're pitching. Now, I would love to see GameStop, Blackberry, and all these other trending stocks to continue to rise, as I would love for you guys to make more money. Now, for me personally, I'm not going to be building position in any of these stocks because I believe that there's just a little bit too much optimism priced in right now. However, if you do already have a position and are holding, I think it would be a good chance to continue to ride this wave and ride this momentum to see where it goes. With that, guys, thanks for sticking around. I had a lot of fun breaking down Wall Street bets and some of these trending tickers. Now, let me know in the comment section below what you guys think about these stocks and this community in general. And with that, guys, I'll see you in the next video, and let's go get that bag.